Blockchain Show is a podcast that demystifies cryptocurrencies and distributed ledger technology.
Hello, ladies and gentlemen. Welcome back to the Blockchain Show. This is episode 155. Today we've got a special guest, Yael Tamir, a CMO and partner at SolidBlock, the company behind the world's first commercial tokenization. She's a thought leader on the topic of real estate tokenization and the future of real estate financing. Yael, thank you for joining us. Welcome to the Blockchain Show.
Thanks so much, Ethan. Thanks for having me.
Yeah, it's a real pleasure to speak with you. So I just wanted to give you a chance just to talk a little bit about yourself.
So my name is Yael. I live in Israel, travel all over the world. Our company is actually a US-based company, and we are involved in projects pretty much all over the world. Like, we're looking at real estate and trying to understand how to make it more accessible to the masses, to investors, and kind of creating a new asset class, which is both accessible and stable, like real estate is, and also liquid or tradable. So people who are investing in real estate are not stuck in the same project for years as it usually is, but rather could shop around, and invest at any stage. And we'll get to that later. So as far as I'm concerned, my specialty for the last 10 years, besides entrepreneurship, was finance. I was a part of a financial group here in Israel that dealt with establishing financial products for family offices and wealth managers. They're based on all kinds of pension funds. And that's where I learned about the different type of demand that people have, for risk and for duration and, life cycles of different products, right? And also, part of that was real estate funds. So I learned about that. And as an entrepreneur, I have a track record in various solutions for various B2C and B2B solutions in fintech and finance. So what happened in terms of getting into blockchain, what happened was that I had a startup in the fintech space, and we were an accelerator in the Silicon Valley dealing with alternative lending. And a lot of people started asking me, why aren't you doing it with blockchain? That was basically a very hot period for blockchain, where a lot of people were throwing money at companies for just mentioning blockchain. I guess you remember the Long Island iced tea,
Yes.
which got renamed to get, and immediately their stock shot up. So I started looking into blockchain, and that startup I had to close, and I got back to Israel, and I decided to learn everything there was to learn about blockchain by doing it, basically. So I worked as a consultant to some really cool projects in title registry, on the blockchain, and projects for banks like identity management, some really cool projects. I tried to stay clear of ICOs in the beginning, but I got sucked in a little bit into that world, and I worked on a few projects that are actually pretty interesting. Only the projects that I really loved in terms of their mission and the product. A few were really successful ones in green energy space, a vegan startup, and some good infrastructure projects that are still alive and to this day. But as an entrepreneur, I always wanted to get back into creating something of my own, but I felt I wasn't ready for about 2 years, because I still felt like I needed to learn more. And I became kind of an influencer in the space. People started inviting me to conferences all over the world, and they still do. So then I went back to my roots, and I looked at myself and I said, well, what did I want to do for the last 10 years working for a financial group? Well, I wanted to invest, but they wouldn't let me invest because I'm not an accredited investor, which is paradox, because here I am working on these investments, structuring these products they cannot invest in, which seemed unfair. So I decided, what are the steps that I can take in order to gain access to these products or similar products that give similar returns? I started looking into real estate and creating this new asset class. And that's possible with blockchain.
That's really cool. That's an impressive background in many different industries. I'm interested about creating a new asset class. How did you come to the realization that real estate was really something that you thought blockchain could have a potential for? Like, what was kind of that defining moment?
In the beginning, I looked into the ICO space and how this new mechanism that blockchain has enabled created a way to finance some assets. But these assets were not, I don't think they were built for being financed. There was a mismatch of the asset to the financing. And number one, they were uneducated or unsophisticated investors. In this case, I think the regulators are pretty much right on the spot to disallow this type of solicitation, for an asset class such as a utility token, where investors don't really have any stake in the company itself. So there was kind of this mismatch. So I started looking into, okay, so what kind of asset or what kind of a blockchain-based product could be interesting? And that's when security tokens kind of started to appear on the horizon. Then we started looking into, okay, so which assets would the security tokens be really matched well with? So we found that there was two attributes. Number one, it was illiquid assets. So what kind of illiquid assets are there? Well, the top illiquid asset is real estate. There's 300 trillion worth of real estate in the world, and only 1% of that is tradable. Literally, there is a market potential of another, well, maybe not 99, but not everything is going to be liquid, but maybe another 60, 70%, which is pretty sizable. So that's number one attribute, illiquid, right? Number two is basically demand, right? So what kind of assets do people want to buy or want to get into? Well, again, real estate came into the picture. By the way, let me backtrack. Besides real estate, there are other illiquid things like art, commodities in some ways, or infrastructure, maybe green energy projects. Equity could be pretty liquid in some cases, but for startups and like early stage companies, equity usually is also illiquid. So bottom line, for illiquid assets, we got real estate, art, commodities, and equity, right? So those are the types of assets that we talk about. So then let's look at the demand, like who really wants to get into these assets? Well, art is a little bit limited. Not everybody wants a piece of a Picasso painting, but most people actually, their major, the biggest investment that they have in their life is the house where they live, or the one that, they invested in for rent or whatever. The mortgage is the biggest loan that they have usually. So, that's kind of everybody wants real estate. So that kind of, for us, it was like, wow, so this is what we're going to do. We're going to make real estate create a modified asset class, right? So it's a modified asset class. We're selling not necessarily a part of the real estate project, but a security that's backed by a real estate project. And by creating this security and putting it on the blockchain, what we're creating essentially is a digital security, which has attributes of a token, right? It's a security token, which means it can be traded in a decentralized manner. You don't need a centralized authority to pass it from one person to the other, except there are, of course, regulatory constraints, which we can talk about as well. Otherwise, blockchain is perfect. It's a perfect mechanism to issue these securities in a secure manner, to tie these securities to an owner, and to trade them at a later stage, and to create a new kind of market. Think about trading of stocks and bonds. In the US, over 50% of people are trading stocks and bonds. So think about them trading derivatives, or securities backed by real estate.
Yeah. A whole new area for people to get into. Young investors even, or people who've wanted to invest and just haven't been able to. I was hoping you could speak a little bit more to the mechanism of how you're able to implement the tokenization of real estate projects. I know you mentioned it's not quite like breaking it up into multiple people can't own a property, can they? Or does it have to be one person per property?
Yeah. So technically multiple people can own property, but it becomes complex, very complex, especially with title or ownership, who actually, in the government databases, like who is on the title, right? So that becomes very complex. And also governance becomes really difficult. So it's actually easy to do this in a compliant way. And there are existing mechanisms for plain vanilla securitization, right? Real estate undergoes securitization today, some real estate. What does it mean, really, securitization? Every government has some criteria for issuing a security. So in the US, the SEC has allowed companies to issue what's called the Reg D 506C exemption. Under that exemption, you don't have to do a full prospectus, and you can offer your security only to accredited investors, which means that, what you do is you write like a mini prospectus, kind of a white paper, and then you send, you go to the SEC website, and then you fill out some forms, and you notify the SEC, well, I'm issuing a security. This is the offering memorandum. I'm going to offer it only to accredited investors. I'm not going to involve retail investors in this offering. And these are the rules. This is what the investors will get. So then what you have is a usual paper, like a PDF document, some sort of an Excel database, where when you get money from investors, they can do a bank transfer, or they can, give you, I don't know, a credit card maybe, and they will get this PDF, which will say you own a part of this company. So you asked me about where are these people written down? Like what do they own? So they essentially will own a part of a company that holds a real estate asset. So we create a company, which is called a special purpose vehicle, that owns an asset, and that company is broken down into shares, and these shares are sold to investors, essentially. So that allows us to kind of put a lot of people into the ownership of the asset. So far, so good.
Yeah, thank you.
It's a little bit tricky.
I appreciate you explaining that. That makes a lot of sense now. I'm curious, is this specifically for commercial projects, or is this going to be for like residential, or is it kind of any real estate?
So technically it could be any real estate, but it's definitely suited much better for commercial, and specifically yielding commercial projects. And the reason being because when we are, raising money from investors, when we go to investors, it's easy for them to understand, to look at, like, let's say, at a cash flow statement of a project and see that this is the yield of the project. And that's kind of basically like parking their money. They have some extra cash. They have, instead of putting $100,000 into a bank or some sort of a money market account, where they're going to likely make negative interest or, very, very low interest, they can actually put their money to work by investing in a real estate project that is liquid. So they can technically sell this investment to someone else whenever they feel like they've made, enough profit on this project, or, they want to get another one, or they just want to cash out. So yielding commercial real estate makes a lot of sense. Now, in terms of residential, some like multifamily projects that are with models that are more, rented and, managed assets, rented out, essentially turning it into a commercial project would work really well. And in terms of like single family, we've seen some projects that are really interesting where you have a fund which has a sizable asset value with a lot of single family properties that are, flip model that are doing pretty well, getting a good interest rate as a whole. So providing investors a lot of value. There's probably also higher risk in this sort of a fund, a market risk, of course, and default risk and so on. But, investors understand that there are certain risks associated with stages of the project.
Yeah, I think that's very well said. We've been playing this board game at my house lately called Monopoly. Pretty popular.
Yeah, so are we.
Right on. And my youngest daughter, she's really into it, and she's just starting to understand how the game works, and she's really cutthroat. She's really good at it. The original designer of the game was a woman who, I think over 100 years ago, was trying to illustrate the difference between landowners, property owners, how they get ahead, and those who don't. It's kind of like the rich get richer and the poor get poorer kind of thing. And unfortunately, she got ripped off, and I think Milton Bradley or whoever developed the game kind of pushed her out of the rights of the game, ironically. Earlier when you were talking about needing to be an accredited investor to invest, it seems like there's all of these kind of gatekeepers in society that you have to do certain things to rise up to the next level. And it really sounds like what you're working on is going to kind of take away some of those barriers. Is that fair to say?
Yes, we're definitely working on that. So as far as the board games are concerned, we also love Monopoly. And I think it really illustrates for kids, like the importance of acquiring property, that's for sure. I also like The Cash Flow Game by Robert Kiyosaki, and the whole philosophy of Rich Dad, Poor Dad. I think he talks a lot about these barriers that are constructed, some fairly and some less fairly, for investors to get into projects. One really cool thing that the SEC is doing right now, the Security and Exchange Commission in the US, they're looking into the definition of an accredited investor. So just like as I was working at a financial company, and a lot of people are doing investment banking, that are knowledgeable about the investment products. So kind of the SEC is saying, okay, well, maybe there will be some sort of a criteria to establish how sophisticated you are as an investor to be able to invest. So I'm definitely looking forward to seeing the progress on that end so that more people can get access to securities. Traditionally, securities are not available to retail investors because, number one, it's easy to rip them off. People who don't have financial education, maybe it's for their own benefit. But, there are people in the population that don't necessarily fit the criteria of an accredited investor, which is, I think, somewhere around $250,000 in income or $1 million in asset value. So, and people want to build wealth. So what we're doing in general, and our plan is to always do kind of a crowdfunding offering alongside with a traditional securities offering, which is available only to accredited investors. And, crowdfunding is, of course, going to be limited in a way because crowdfunding laws limit the amount that somebody can invest or the total amount. Like in the US, it's less than $1.05 million that you can raise. In Europe, it's up to 5 or 8 million euros, which is great and much higher. And Hong Kong is the same. In the US, there is one up-and-coming regulation that may even allow us to raise up to $75 million, but it's very difficult from retail investors, but it's very difficult to obtain. But we're definitely working on that. So our goal is to always involve retail investors to an extent to kind of let them build wealth within the regulation of that country. So, by the way, the amount of investment from retail that you can get is usually limited up to 5,000 euros or $5,000. So even if somebody makes a stupid investment, they're not losing that much money. But that said, we're doing due diligence for all of our projects. And in general, right now, we're focused on taking the best, the highest yielding and projects and helping mitigate risks with due diligence, with valuation, everything related to giving as much data as we can from the project. Also establishing some IoT, data, again, sensors to get the data from the project, kind of to gauge and to ameliorate the risks.
Very good. And I know that earlier you talked about some other assets like art. I was just wondering if SolidBlock would be able, if somebody could use it to tokenize any assets other than real estate, or are you guys just focusing on real estate at this time?
So we do have a white label version of the platform that if somebody would really be interested in using it to tokenize art, we can, or any other asset, we can totally get on board with that. But I think there are many other, companies out there that could be used as well. So we have a specialized focus on real estate because that's an asset that we understand. We don't understand art, commodities, not so much. We do work with green energy infrastructure because that's pretty much aligned with real estate. And in terms of equity, we have a position at this point that equity is hard to evaluate. Real estate has some standard valuation techniques that are, global. There are companies that their job is to create surveying, real estate surveying or valuation methodology that we rely on. But for equity, a lot of times valuation is subjective. So when you're doing a primary offering, and let's say you're taking Lyft. I don't remember if Lyft is public or not. I don't think it's public. And let's say, or WeWork. Let's talk about WeWork and how WeWork was, which is a co-working company. was valued at a grossly overvalued, a huge high value. It was maybe 5 or 7 times its competitors, right? So what happened was and they wanted to do an IPO. So what would happen in such an IPO, a public offering? They would do a public offering, and immediately the stock would go down, probably drop because of this wrong valuation. So we're very careful about asset valuation, because if the asset is overvalued, then there's not going to be any trade. There's no upside to invest in this asset in the secondary market, right? So there's primary offering, and then there's a secondary market, right? So that's where a primary offering is the first time we do the private offering, and people are buying in the private offering, they're buying the security. And then there's secondary stage, where people are trading these securities.
Yeah, I like how you guys are replacing traditional like paper certificates and putting it all on the blockchain. It gives it a record. It's immutable. Sometimes I wonder, like, in the future, are they going to look back and this is going to be one of historians' greatest tool to track how property's been transferred through the ages? And, if ever there's, a stock market downturn or like, some sort of pandemic, the blockchain still runs as long as the internet is working. So I'm kind of wondering, you mentioned how things can become overvalued. Was it overvalued or under? Is it kind of just the nature of it being on the blockchain? Is it a little bit more insulated from volatility?
That's a great question. It's a great question. So I'll take it in a slightly different direction. Well, first of all, by putting asset on the blockchain, and like I said, you're creating a kind of a new asset class. So this asset, let's say that you have an office, let's say you have an office building next to the Empire State Building in Manhattan. And let's say that you tokenized it, meaning you made a digital security, which means that this asset can now potentially be liquidated faster, right? You may not be able to find a single buyer of this asset very quickly who's ready to put in hundreds of millions of dollars, but you may be able to, liquidate it through a fractional investment to many investors, but potentially it's more liquid. So what happens to an asset that's more liquid? Number one, it's accessible to global investors now, right? We can go to Hong Kong and issue a security there that's compliant with the regulations and technically sell the asset there, right? We can go to Dubai. We can go to many places where they want to own a piece of U.S. real estate. So potentially it's more liquid. So what happens? Will the value go up or go down?
I'm going to say go up, but I'm not sure.
Right. Well, the higher demand, in economics, higher demand results in obviously higher price. So the value is going to go up. Now, on top of that, in the United States or in many countries in the world, you can use real estate to get some tax benefits, and it really depends on where you put the real estate. So in most cases, it's put with all the other illiquid assets. But if you have a liquid asset, a cash flow kind of asset or a cash-based asset, then it's a completely different ball game, and you're eligible for tax breaks, you're eligible for some better loans because you have cash to back it up, right? So you can, if you have a loan that you have to repay, you can quickly sell your asset, you can repay the loan. So it creates a lot of benefits in general. So and besides that, what you touched upon in terms of creating kind of this public knowledge of the asset, we are creating a very public transaction ledger, right? So you're looking at the financial history of each asset. You're looking at how much people buy and sell this asset, which kind of shows you the value and the trust of the public, right? You have a much better aggregation of data to create a better price, right? You're creating a much more perfect market for real estate. I think that's very interesting in itself. And the final point on for historians, whether we're gonna help them to get to get better information of what happened. And I think in the event of kind of the Armageddon, the only thing that's going to be left is the paper records. So they're probably not going to know about anything that happens from now to in the future. They'll only know what happened in Middle Ages when people were printing out the PDFs, or writing it by hand. So I think that's the case.
Yeah, that's a good point. I think stone is really the only thing that stands the test of time. So might have to go back to carving. Well, that's really interesting. I kind of dove into the real estate thing a little bit hard there, but I know that you're involved with some other projects.
Yeah, I have an organization promoting women speakers and influencers called Women in Block. I kind of created this directory of all the women who I know have met and also researched on women who speak on different topics. So if anybody is running a conference or an event, I could definitely put you in touch, because I think in general, in this industry, like in many others, we need better representation. So that's one goal of mine in this industry. I am involved on kind of a mentor basis and different initiatives, and an advisor to a title registry in Somaliland called Teramal. This is a project coming out of a country that's next to Somalia, and kind of this democratic entity that's not been recognized. So it's another project that I've been doing, which is on the cross of kind of social enterprise and blockchain and also property. And what else do I do? I think those are pretty much the big ones that I'm doing.
That's a pretty impressive resume right there. I really appreciate you taking the time to come on the show today and explain this to us. And I know that there's a lot of value for anyone listening. Where can people go to connect with you and maybe learn more about what you're working on?
So you can go on our website, solidblock.co. My email, yael@solidblock.co. Twitter, I think it's at Yael Tamir. And LinkedIn, I always answer. So if you connect with me and kind of shoot me a message, I'm always open to talking, also on the phone and chat and so on. So, I'm just happy that people are interested, and we get so many contacts from all over the world on our website every day, trying to do our best to keep up. There are investors, developers, sponsors, and people learning about how to do this. So yeah, I would love to connect with anybody interested.
Well, Yael, thank you so much for your time. This has been a real pleasure talking to you.
Sure. Thanks for having me, Ethan. Have a good one.
You too. Thank you.
Thanks.
Thank you, everybody, for listening to this episode of The Blockchain Show. My guest today was Yael Tamir, a CMO and partner at SolidBlock.co, the company behind the world's first commercial tokenization. She's also the founder of Women in Block. If you enjoyed this episode, please give us a kind rating and review on Apple Podcasts or wherever you listen to this episode. Feel free to reach out to us, info@theblockchainshow.com, if you know of anyone who would make a great guest like Yael. And connect with us on Facebook, Twitter, at blockchain_show, minds.com. My Minds channel is at KinderConnect, but there's also one for The Blockchain Show and a group as well. It's a great place to connect, share ideas. Thanks again for listening, and we'll see you next week.